You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again. It's Education Wednesday. It's time to unleash the beast. That is Options Bootcamp. Yes, time for a little bit of the old OBC. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the ever-compelling network upon which so many of you are binging these days. First off, if you're new to the network, you're new to the show, make sure you subscribe to the full network. And then B, if you want to go above and beyond, check us out, theoptionsinsider.com/pro. A lot of great stuff popping off there all the time. Amazing pro Q&As. I just saw there are over 113 pro Q&A sessions. That's 113 hours of just the best minds in the business, just tackling all of your options and associated questions you could possibly think of. So the educational value there is unmatched. You can check that out, as well as, of course, 100-plus episodes of Options Oddities, all the great giveaways, exclusive access, all kinds of fun stuff. theoptionsinsider.com/pro, the place to go to learn more. And if you can't make that, you just like what you hear, you can always throw some stars, a rating, or review our way. Just like this week, we have Jing16. Looks like he's over on iTunes, giving us 5 stars. Says he's waiting on Wednesday. Absolutely love the show! ! The content is thoughtful and presented well. Mark Longo has a way of making very complex material easier to digest and keeps it fun. Wow. I listen to the other Options Insider podcasts as well, but OBC is more suited, I should say, for my current knowledge level, which he puts in parentheses is low. So I find myself waiting for Wednesday to come around for some fresh content. I know it must become mentally taxing to cover the basics over and over, but please keep it coming. Grazie mille. Ooh, a fellow paisan. I like that. You're welcome. You're welcome. Prego. But yeah, interesting stuff. We love all you folks take the time to rate and review. It does help new people continue to discover the show. And when they discover the show, they discover this black-hatted guy himself over here, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show. A, B, what do you think of our friend here who's just waiting on Wednesdays, also a fellow paisan, which is nice. And then C, have you recovered from the grand event that was Mastermind, sir? 3-parter.
Yes. It's always nice to get a little bit of love, especially from fellow paisans. Yeah, man, I'm all recovered from the mastermind. It was a wonderful event, as you were able to witness, and I look forward to it every year.
Just like we look forward to a little bit of the old basic training here on the show.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in, prepare to learn. Yes, sir.
All right, everybody, welcome to Basic Training. Dan, how you feeling? I know you did a lot of masterminding last week. Can you handle a little bit of basic training, sir?
Yeah, let's do it, man. I look forward to this every week, too.
All right, let's get into it then, listeners. By the way, all of our pro folks, if you're hanging out in the pro, you get a nice treat this week. you get a doubleheader, another doubleheader coming at you right after this show. So hang out in the live. We'll be back again instantaneously with another episode in your ear holes. So the rest of you on the on-demand side, that'll be hitting you next week on the network. So another fun bonus for our pro folks out there. And Dan, we thought we'd tackle something interesting this week. This was kind of inspired by a question we discussed live on the Mastermind last week, which came from Michael. He wanted to know, are Mark and Dan surprised that options and futures volume has remained so robust throughout the summer? What do they think is driving this interest during what is traditionally a seasonally quiet period for markets? And, we touched on that a little bit on the Mastermind show, but it seemed like an interesting time to look at some of the numbers we talk about here on the show and maybe break it down a little bit more and also talk about kind of some of the trends we're seeing and also what's behind this stuff. Like, for example, I always talk about these numbers. These are from the Options Clearing Corp, but we just throw that around here on the show a lot. We kind of assume you at least know what we're talking about there. So maybe we'll start there. Options Clearing Corp. What is this weird entity we're always talking about who's reporting all these numbers for us? Well, they are as they sound. They are the clearing corporation for the options industry, which means they are taking the other sides of your trades. Now, you might say, wait a minute, what about the market makers? And yeah, the market makers, maybe they post a 50-cent bid for an option. You come in as a customer, you say, I'm going to sell 10 of those at 50 cents. So you are technically transacting with that market maker. But because they don't want any real counterparty risk in the listed options market here in the U.S., what happens is this big entity called the Options Clearing Corp, which is effectively a jointly owned entity by all the exchanges. They all contribute money based on how many different exchanges they own, and they contribute to this pool of funding, and that funds this industry utility known as the Options Clearing Corp. And they are the backstop of those trades. So they are actually the other side of your sell, and they are the other side of that market maker's buy order out there. So I know it's a little confusing, but they're there to make sure that, let's say something happens and market maker firm blows out. Oh my God, now they're not there to take the other side of that trade. Well, you know what? You're cool. You're covered because your actual other side of your trade, your counterparty is actually the OCC, and they are backstopped by this deep fund. So effectively, anything could happen. You never can say never in this world. We've all learned that post-2020. But it would be a disaster of epic proportions if the OCC were to fail to backstop one of your trades. That means the entire U.S. options market has gone under, and we have all sorts of other problems going on than your 10 lot. But yes, it's a nice little safeguard we have put in place there to make sure, we hear a lot on the crypto side, for example, huge counterparty risk there. You're selling something, you don't know who you're selling it to. You don't know if they're going to be there. When your trade is a home run, are they going to be there to collect on the other side? Chances are maybe not. Some of the quote-unquote exchanges out there as well that are supposedly backstopping some of these trades. Are they going to be there when it all hits the fan? We all saw what happened with FTX. That could easily happen again. So they wanted to take that concern out of the listed options market here in the U.S., hence OCC there, taking the other side of all your trades, and why there really is effectively no counterparty risk when you're trading options in the U.S. Dan, a nice little bonus here for listed options traders. I know it's one of the reasons you've been so reticent to dive into all things crypto. What are your thoughts about kind of OCC, the role they play, and the effectively zero counterparty risk in the options market?
Yeah, we talked about that kind of with crypto before for sure. But just think about it, like the banking stuff that happened before. The government stepped in and kind of gave an implied FDIC protection for all banks, right? There's bad, so every now and then there's a bad apple who tries to, do something he or she shouldn't. And sometimes it's by mistake too. People get over leveraged or overconfident in a trade, or just a crazy black swan event happens. And, if somebody ends up losing $1 billion, that could take down a brokerage firm. It could take down the whole system. And if the person who made the $1 billion, who's on the other side of that trade, just gets a message that says, oh, sorry, but that guy can't pay, that compromises the integrity of the whole system. So it's really important to have clearing firms to guarantee everyone's trades.
Now, we get into that because these numbers we're talking about now come out of OCC, and there's a lot of numbers that they throw at you. So if you just see these numbers in a report, let's say you go to OCC's website for yourself, you see a bunch of stuff. They break it down in a bunch of different ways. the total volume, but also they break it down by index volume, ETF volume, equity volume. They even throw futures in there, even stock loan. We kind of kick the stock loan to the side. That's not our forte. The stock lending side of the business doesn't really interest us as much. But the overall volume stuff is interesting, and that's where we get back to what we were talking about with that question. Again, 1.02 billion contracts with a B in August. We come back to that because that is just a ridiculous number, especially for that time of year. August, the dog days, not much going on. By design, everyone's off doing something else. Volume is usually light. Vol is usually in the toilet. To see over 1 billion contracts, a level we had never hit before until March of this year. We hit it again in August. It's just crazy. In fact, we managed to look at the year now so far to see how the trend is lining up. Is August the busiest month ever? Nope. It's actually number 2. We managed to beat it back in March, 1.059 billion contracts. And then August, number 2, 1.023. Then June, right behind it, a 962 million. May number, and then right behind it after that, 949 million. Jan after that, 923. Then February, again, not many trading days in February, 887 million. Then July, 877 million. And even that's impressive for what we normally would expect in summertime. We'd expect even less than that, let alone 1 billion. And then April, bringing up the rear this year with 764 million. Interesting that April, kind of the weak period. You know, we were just coming out of that contagion in March. You think there would still be enough grist for the mill to drive a little bit more options paper, but April bringing up the rear. But there you go, Dan. Anyone who says, you know, what were we expecting this year? I don't think anyone had this in their cards, Dan, that we would hit 1 billion contracts twice and that the second leg, Dan, would be in August. And clearly, outside of a little outlier in April, the trend has been pretty much up all year, sir. Does that surprise you?
No, I mean, not really. Just because, I mean, I think options are more important now than ever. It took a very, very long time for the general public to understand options enough to accept them, you know, let alone accept them. And, you know, we somehow crossed that barrier. I mean, COVID helped us cross that barrier. It got people more interested in learning about them. And we crossed that barrier. And I think a big part of it is just the education that has been going on since the beginning, like the Options Institute at the Chicago Board Options Exchange. You know, they pushed the way, the OIC pushed the way and still does for a while. Private folks, you know, like the things that you and I do. So I think that that's a big part of it. And when we have markets, you know, going up, going down, it makes a really good case for using options as insurance policies. And it also makes a good case for using them for trading vehicles because they can have less risk.
Yes, they can. By the way, you mentioned OIC. You may have heard some of the OIC folks on our network, on our Advisors Options show. They still sponsor that show. You've also heard them doing their own show on the network called The Wide World of Options. You may be a little bit confused, the delineation between OCC and OIC. OIC is the educational arm, effectively, of OCC. So they are very much related entities. If you work for OIC, you effectively work for OCC. But it is the educational entity out there. Don't confuse them as the two. One is kind of just doing the clearing, all the behind the scenes minutia, the utility of the industry. The other is kind of the educational arm that's doing the webinars and the outreach and shows on this network and all sorts of fun there. Speaking of fun, we always have fun when you folks take the reins. Let's get a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, let's get to the mail call where you folks take the reins. I see Option God in our live chat on the pro side saying, hello, sorry I'm late. What did I miss? Well, you know what? You could check it out on the on-demand side. Luckily for you there, Mr. Option God. Welcome to the chat. Of course, we did a little deep dive there into some of the numbers we're seeing and some of the nuances there on the back end, the plumbing side. Doesn't always get talked about, not the sexiest stuff in the world to talk about clearing. I get it. Not sexy, but sometimes you have to address these things. People have questions and they don't know what the hell we're talking about here. Speaking of questions and what we're talking about here, let's get out to our questions of the week. Last week was, of course, a shortened, truncated holiday week, so we had a little bit of fun with that one last week. These are a couple of names we've been talking about on our Options Oddity show on the pro side for a long time, over a year now. Both of them now have dropped into the doldrums at the time he posted this last week around $1.20. I'll have to check to see where they are today. But it was Oatly and Nikola, two, you could say, stocks that have seen better days. And we asked you just a little bit of fun last week. Which would you rather buy, gun to your head, for $1.20? Dan, if you have a choice, have at it. And then B, which one do you think our audience went with?
I would go with Nikola for sure. Yeah, that's what I would go with.
Where do you think our audience went?
I would think they would go with Nikola, but it's hard to say.
Well, they're both sucking chunks right now. Oatly's trading about $1 now, so it's lost even more. Oh, but Nikola has lost even more, 86 cents. So Nikola, they're coming for Nikola right now. So I guess the technical winner is Oatly by losing less. And our audience went that way, 56.5%. They like oat milk over the electric trucks, Dan. So there you go, 39.1% for Nikola and then 4.3% for other. This week, an interesting one, Dan, 0 day. Just look at all those numbers we talked about. In fact, we just talked about the numbers for August. A big part of that growth, listeners, in August was index options. 62.9 million in August of 2022, 89 million in August of 2023. That's a 41% increase. So index options on the rampage. The lion's share of that, obviously, listeners, is coming in the 0 day front, which makes this question of the week very interesting right now. We're asking you, hey, 0 day, clearly popular in the index front. Everyone's slinging them in the indexes. The question everyone's coming to us now is, hey, what's next? What else can we list 0 day on? So we thought we'd put that to you. Which product or market or complex should list 0 day options next? Gave you 4 choices here. Gave you your stocks, so your traditional single names, your Apples and your Teslas, all that fun. Or getting out into the commodity space, your energies and your ags. I'll listen to last week's TWIFO, This Week in Futures Options. I was joined by our buddy, Mr. Russell Rhodes, a.k.a. the once in future Dr. Vix out there. And we had an interesting debate about adding 0 day contracts to the energy space, nat gas and WTI, because it seems like they might merit it now. So if you're intrigued by that, check it out. If you're not listening to the full network, you're missing a lot, obviously. Crypto, so your Bitcoins and your ETHs, or the vol space, your VIXs and your VXXs, all that kind of fun. Mr. Dan, same question, sir. What is your vote if you have one? And B, what do you think our audience is voting for?
I would say probably the most liquid, 5 or 10 options names. That, to me, that makes the most sense, because I think that's where the greatest amount of volume comes from. And once a contract is liquid enough, more volume begets more volume, because you have arbitrageurs going in and, spreading one expiration against another. So I think that would make the most sense from an exchange business standpoint, and probably does the best service to individual traders and professional traders too.
Well, right now, our audience is agreeing with you, Dan. 47.1% choosing the single name equity options. They're saying, cash secured after hours exercise. All that be damned, Dan. Full speed ahead on 0 day. I think a lot of the industry is with you. Exchanges clearly see money there. They want to go after it. There are just some stumbling blocks. We talked about those on the network before. It was a big debate at this year's Options Industry Conference, which is, of course, put on by the folks over there at OIC. And it was all, can we have Apple 0 day and Tesla and all this stuff? And the answer right now is still no, because we have the contra exercise. That's a problem. And a lot of people still want to hold on to that. So either you lose that, or you maybe do the cash settled route, which is listing all kinds of new options, listeners, that don't settle into stock, but settle into options, which is very relevant for the topic we're going to tackle on our next episode of our doubleheader, settling into stock. But that's a whole new product category you have to list just to list these. Is it worth it? I don't know. It's up to you. But I think the exchanges might want to make that college try, because they see these numbers we just talked about. They see the record growth coming in the month of August when it shouldn't be happening. And they say, you know what? There's gold in them Thar Hills. We're going to go at it. Volatility coming in number 2, 29.4%. Can we have a 0 day VIX? I mean, they have the 1 day VIX index they put out. Some people think that can't be done. Others want it. Apparently, a bunch of you do. Number 3, 17.6%. We say the commodity option. So could be energies, ags, whatever you're looking at out there. And then number 4, bring up the rare, only 5.9%. No love for crypto. Interesting stuff. So, Mr. Dan, a lot of our questions of the week. It is now time to turn the spotlight over there on MTM. What is your MTM question of the week?
Yeah, one of the things that we talked about, I recently redid our covered call class. I think I might have talked about that in the last show. And one of the things that I put in that class and put in all my classes is a little bit of a caution about trading options on stocks that are less than $25. If the stock price is less than $25, man, it is pretty darn hard to make money trading those. Just because the options tend to have very, very little value or very, very little value, like time value, because they trade as a percentage of the option price. So it just, my advice is to maybe try and avoid some of those options on the cheap stocks. They're just too hard to trade, man.
Sounds like it might make a good grist for a future episode, sir. Maybe some tips and tricks for trading options if you have to. Obviously, your first advice is to avoid them. But if you got to get in those, you're talking the Nicholas and the Oatleys of the world, Mr. Dan, which are now arguably options in and of themselves, sub $1. But maybe it might be a fun episode to delve into some of the misperceptions, mistakes people make when trading those, Dan. What do you think?
Yeah, man, that actually sounds like a really interesting idea because, there are some use cases where I think it's possible, but most of the time I'd say it's just not.
Yeah, it's an interesting challenge. I came up against this myself just recently in a stock I shall not name that was trading around $1.50. I was looking at myself saying, I got a decent number of shares in this thing. And I was like, is it even worth overwriting the $1.50 call there? I mean, it's at a certain point, but otherwise it's just sitting there kind of like wasted money for a long time. So I feel your pain out there, listeners, but dime, 15 cents, whatever they were going for, is not exactly the kind of thing you want to give up all your upside for. So yeah, it's a challenging scenario. Might be a fun episode. Maybe we'll get into that, listeners. Let us know if you're intrigued by that. Speaking of letting us know, let's go out to Theta Noob. I like that handle. He says, there was an options bootcamp episode back in July about how there are this group of traders that specifically trade VIX products. And yes, you are correct there, Theta Noob. We talk about that a lot on our Volatility View show. People just live in that vol space and they don't really look at much else. That's all they do. They trade that vol decay over and over again. And if you know what you're doing, it can be fairly juicy. But he says, that prompted me to look into it, and I'm testing a leap put right now and managing it with a front expiration short put. And he sent a screen grab. I'm trying to see what he did here. Looks like he's in UVXY, which is one of the names we talked about on that vol episode, listeners. If you're not familiar with that, go check out the episode we just did back in July about trading in the volatility space. UVXY is one of those products that tends to erode aggressively over time due to that rolling of the VIX futures. That negative roll yield dramatically impacts that product, and it loses value over time as a result. And people like to play that in a variety of ways, including the way he talks about buying puts. Now, he bought a leap put. Looks like he bought the June of next year 15 strike put when looks like UVXY was trading around $17.50, maybe $18.50. It's hard to tell from the screen grab when he executed this. And it looks like against it, he sold the 15 put in September. So he did it straight calendar spread, no diagonal there or something along those lines, which you may want to consider as well. Give yourself a little bit of breathing room there to the downside. It's interesting. I mean, the long-term set it and forget it trade on the put side was very popular for a long time in the vol space. We saw it a lot in VXX. That was a product people like to do that in. VXX had a lot of problems. You can listen to our Vol View show if you want to learn about all those problems. That trade has gotten less popular. The volume has fallen off a cliff in VXX. UVXY was another one where that used to happen a lot. UVXY, that trade got a little crowded for a while as people kind of backed out of it as well. You would see a ton of puts out of the money in the OI in, let's say, the Jan expiration cycle. And people would just live there and just buy those puts, and that was their trade. So they got very crowded. People kind of backed off of that. UVXY has also had some issues. They don't really reverse split it very aggressively. And now if you're going to go that far out, you're going to have some kind of vestigial reverse split legacy positions on. They're not going to be very liquid. So there's some issues there. The whole notion of going that far out and then selling the front month put against it, I don't know if I love that entirely. I get what you're going for. I like myself, I think, to be a little bit more nuanced. I would probably I don't see the prices here that you bought that put for, so that might help see what you're working with here. But in general, I try to keep my things a little bit closer to the vest now on these products for a variety of reasons. UVXY erodes aggressively. If you're buying a put that far out, you're not getting a huge delta. So you're not going to capture as much as that as you're going to have a nearer duration put. And then also the aggressive nature of the decay, they have to reverse split it almost every quarter now. So you're going to get these weird strikes in your positions. The pre-reverse split stuff is going to be less liquid. So that this long-term put gives you less ability to roll and really be nuanced with your position. If you went out, let's say 6 months, and you wrote a 1 month put against that, now you have a little bit more nimbleness, a little bit better delta to capture some of that decay. And also you can be a little bit more nimble. I think you're writing monthlies against it. Maybe you're writing the weeklies here, in which case you can be a little bit more nuanced there as well. If you're writing weeklies, you can kind of roll your strikes as required as opposed to once a month. That could catch you as well. So it's not my favorite setup. I haven't seen it done in UVXY in a while for some of the reasons I've just mentioned. Maybe I need to sit down and kind of back test it and workshop it again and see how that performs in kind of this new flavor of UVXY. UVIX might be initially a better choice for this, but UVIX, they seem to be letting that go to zero. That's a levered product and a heavier leverage, so it's going to decay hopefully even faster, and it has. In fact, it's a victim of its own success. It has decayed sub $3 now, and they don't seem to be willing or able to reverse split it, so that complicates this issue as well. You're not going to go out and buy a 1 year out 3-strike put. That's absurd. So there's issues with some of the other products I might prefer. VXX would have been the go-to for this. That's had issues now as well. I wouldn't tie up money for a year in VXX because Barclays could decide to go crazy again at any moment. There's always at least a 10 delta of that lurking in that trade. So I guess UVXY is the kind of go-to by default. So maybe you did choose the best. First blush, I don't really love this structure of the far out and that near-dated of a time spread and doing it all in the same strike. So you kind of did a straight calendar. You didn't do a diagonal, give yourself a little bit of breathing room. We talked about it a little bit on vol views too. I don't think any of my co-hosts were hugely enamored of it as well. But you're on the right track here. Who was this? Theta Noob. You're on the right track. You see the value of that decay trade. The challenge now you're discovering, the challenge is how to go about it in a way that doesn't just involve you shelling out all this money for these puts, because market makers are not stupid. They know these products decay, so they're going to price a ton of juice into these puts. So if you go out and just buy a straight, 10, 20% out of the money put in these names, 1 month, 2 months, 3 months, 6 months, it's going to cost you an arm and a leg. So now the struggle becomes, how do you offset that? And one way is a time spread. People like flies in these. There's a lot of ways you can go to try to offset that, but you have to do something to offset it. Dan, we talked about this on our show back in July. We kind of opened up the floodgates to talking about some of these vol strategies. They are fascinating, but also very nuanced, which is why we told, this was on Twitter, we actually told them, hey, if you're interested in this stuff, definitely check out Volatility Views. We talk about these types of trades literally every week on that show. So if you're interested in this, you want to dip your toes in. Luckily for you, that show has been running for over a decade as well. So you have hundreds upon hundreds of episodes to sink your teeth into out there. But Dan, what are your thoughts on this long-term vol erosion trade and the way he set it up with this calendar and UVXY?
Yeah, I mean, to echo a couple of the things that Mark was talking about, the absolute most important thing is to make sure that you understand UVXY and all the nuances behind it. And, I'm not saying you don't or anything like that, but, man, if I had a nickel for every time I saw somebody put on one of these fairly complex trades, they're derivatives of derivatives, with a very unintuitive and kind of weirdly designed underlying and contract structure. So, just make sure that you really get it, trade it small, make sure that it's working the way you think. And hey, man, good luck.
Good news is he says he's up now. We took it off right now. So there you go. It's working out for you so far. But this is a longer term trade. It's interesting to see how it works out longer term. Dan, that music means we got to get the heck out of Dodge. Luckily for all you pro folks, just hang out. We'll be right back instantaneously in your ear holes with another episode of OBC. For the rest of you, back again next week. Before we go, Mr. Dan, where should folks go to learn more? Maybe join up on a mastermind down the road, sir.
Yeah, we'll welcome you with open arms here at Market Taker. Just go to markettaker.com, 2 T's in a row, click join free, and become part of our community.
There you go. Check it out. Speaking of community, Nichols in the chat saying that was a fun deep dive on OCC and volume. Interesting stuff. Well, thank you for listening. And we'll see you back here in a few minutes, Mr. Nichols. For the rest of you, we'll see you back here next week. Another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.